In the previous videos of this video series on price action mastery, we've discussed things like recognizing market flow as well as finding value on our charts. In this video, we're going to follow up on those lessons and we're going to discuss confirmations, where to actually enter, and how to enter the market given a market that is in our favor. And so with that, I wanted to go through a little bit of a replay function. Now, I'll give you some transparency as we get started with this. I am, of course, using the replay function, knowing what's already happened in the market to a degree. So please know I am cherry picking a little bit to show you how a trade setup should look, should it go well. Of course, I am aware of that. I'm just trying to give you guys the benefit of the doubt. I'm not trying to, fool you or anything like that. I'm showing you a good example so that you can see a good example of how things could work out. So here we go. Let's say that we're looking at this chart. What do we notice about this? The market has changed directions. There's a pretty clear, again, when we talk about this price action stuff, I'm not a super genius mathematician or anything like that. What I'm understanding is sort of the emotions and the reading that the price itself is telling us. The market was massively down here, right? Really, really bearish. Looking at the $𝗀𝗏 on the 1 hour chart. Again, remember that within this course, when we talk about price action things, these things can be applied to any time frame, any chart. We are just trying to read the price action of the market. And what we're noticing here is that the market flew to the upside here after really big sell-offs. Okay, now with that massive change in momentum, we are looking for potential buys at reasonable levels. So let's let price tell us a little bit about what's happening next. So we've just jumped. We've seen these really strong green candles, which, by the way, just taking things at face value, that is massive buying in this market. We saw a slight retracement with just follow-through moves. So we are still very bullish in this market and looking for our chance to potentially get involved. Now, if we zoom ahead for a little while, what you'll notice is that price did come down, but there's nothing looking left. There is no points of value that are very clear for us to see. So at this point, I'm not going to try and make the claim that we would have taken any sort of trades. However, let's continue on and we'll see if we can come up with some ideas. At this point, the market has told us something. It's told us that this area at least seems to be showing some signs of buying pressure. And remember, we're not overthinking. Things are looking very bullish and we've seen some signs of life around this area. If the market dips back, I would say that that could be potentially an idea for a long continuation play. Let's see if we get that. Okay, well, there's the trade, right? So of course, in hindsight, as I mentioned, we could have potentially been looking for long setups. And this is one of the two main styles of trading that I, generally speaking, will do. I am either buying support in strong uptrends with a good reason to do so, or on the flip side, I'm buying break and retest, which we'll take a look at in just a moment. Price action trading is no easy thing to learn, but maybe with the help of our free PDF, our trading guide on how to use technical analysis, you might be able to learn more, and especially if you'd like to dig through some of our strategy ideas and particular ways to use certain sets of price action, I invite you to take advantage of our free price action tutorial guide. If you would like a free copy, we'll send you a copy on Telegram. One of our team members will hook you up with a free copy. All you have to do is send the word technical handbook to the link down below in the description. Click that link, send a Telegram message to one of our team members, and they'll hook you up. So let's say that we spot this opportunity and we are looking to take advantage of this trend continuation idea. We've marked our zone very specifically, again, this area here where we found support twice after the recent strength. I mean, if you think about if we pause for a second and we think about what we're seeing within these green candles, we are seeing clear market decision that, at least for the time being, market participants want to send this market higher, and that is likely where they're going to try to get it to go. And again, you may have institutional buyers in there, you may have retail traders, but regardless, we are seeing strong enough candles to close us in the upper range of these candles very decisively. So after finding some areas of value, again, we have pointed out that on this chart, there has been some strength in this area. A dip back to this area would be considered bullish until further notice. Now, stop loss placement here is, of course, a very important component. I am leaving some room here underneath. If we mark this specifically, just so you can see, there was a wick underneath support, basically potentially testing out some of the stop losses and things like that from some traders out there. So we know that we really don't want to see price go much below that. So with a stop loss in place, we could look to potentially risk, what is this? This would be About 20 pips would be around here, which, okay, 20 pips, that looks pretty reasonable. So let's say, assuming we got into the trade, where could we target? And here is where a bit of preference comes in. But for me, I'll tell you what I generally do after I would just go, okay, so I'll come back to that. First things, a lot of time people will challenge the recent high. They'll target the recent high. And I don't think that there's anything wrong with that. In fact, I think it's pretty reasonable to say, okay, well, this is a point of resistance, obviously, and there's a pretty good chance that if we were to see a rally, we would want to come back to that previous high to test to see if there's still sellers in this area, right? So we could actually mark that on our chart as previous high target. And I don't think that that would be necessarily a wrong idea. Now, we also might want to mark on our chart that this area would be a level of, this would be our no-go zone, right? Basically, we don't want to see price go underneath that. Otherwise, it sort of nullifies our idea on the trade. If price goes underneath this, again, obviously this level was not nearly as strong as we thought it would be. We are expecting a strong rally off of this level or bust. Now, first, I am going to show you guys, of course, targeting the previous high is probably fine. In this case, you're getting a 2-to-1, but I personally think that let's back up for a second and talk about what we're thinking about here. If we're talking about going for value, for trend following, there is an argument, in my opinion, to go for something more. And the reason for that is that understanding that a trend does not mean consolidation and then sell at the previous highs. To me, trending means higher highs, higher lows, right? The simple stuff that we all know from the textbook trading stuff. Higher highs, higher lows. So if we are assuming and we're trend following here, we're looking for points of value, we're going for market flow here, all those good things, we are looking for probably a new high. How do we measure a new high move? Well, there's different schools of thought, but for me, you can either look at past resistance as potential highs, right? So we could maybe make an argument perhaps that this area could be a reasonable place to look out for. In fact, that's what we'll annotate here. We'll say, let's call that the 4-hour high, because I just happen to know that if we were to look at that on the 4-hour chart, we could kind of identify that as a 4-hour high. Would it be reasonable to say price could go there? Sure. If the market does continue to trend, it would be very reasonable to say we could probably see a move up to the 4-hour high upon a breakout of this zone. So that's another thing. Now, I personally like to trail stops, and I plan on talking about that more in a future episode in this price action course, because I truly believe that if the market is going to trend, we have no idea how far it could trend, and trying to call a top is a really difficult game. Remember, I'm not a big fan of calling bottoms and tops. I really try to go with the flow, and that flow could last a lot longer than I'm expecting. So anyways, market pulls back, gets us into this first idea. And let's just see a little bit of what would have happened. Okay, so we see price comes up. We're testing this area again, and we find the buyers. And this right here, you guys, is a lot to talk about. Right here. That retest of the low. One more time, grabbing stops, grabbing any, loose hands before rallying higher. We are now into the trade. We are in both of our scenario trades, and we'll see that we have already basically hit our previous top. And now it looks like we have potential to continue on. Let's see, we'll give it some more bars, pass some time. We've gotten out of that first trade, and now the second trade is, did we hit it? I don't know if we hit it or not. It looks like we're about to hit it either ways. Let's see if we do. And there we go. We're out of both trades. Okay, so here's the thing, right? The reason I don't personally love to use a strict take profit, and something that we will be talking about more in this price action course, is because at this point, what is to tell us that the market cannot continue further? Just because we've come up to a high does not necessarily mean that this market now has to turn around and go back down. The market could continue to trend, and we've got an excellent entry. My personal opinion is there's no reason to cut this trade short. In fact, one of the foundations of this price action course is going to be understanding that price can go a lot further than we ever expected to do so. And that's honestly where we're, in my experience and in my trading, that's where I find my edge, is those very rare and very strong continuation trends. But for the sake of this video, I want to keep it open-ended to people who have different approaches and different styles. Not everybody is going to trade exactly like me, and I appreciate that. And I understand that not everybody's going to have the same strategy as me. My strategy is not the Holy Grail by any means. I don't believe that that exists. But I'm just sharing a little bit of my tidbit as well as just some general approaches that people will think about. Now, nothing wrong with taking some trades off, right? Some people will take partials. Some people will trail stops. Some people will take a hard take profit at one particular price level. I don't think that anything is wrong per se. I think what is wrong, my opinion, would just be holding on to losers aimlessly without a plan. But holding on to winners, I think, is always a good thing. So that would be my take on this. Now, one more thing is we could just see how far this thing goes. And what you could see is, had we taken off our profits there, at this point, we left some room on the table. Look at this. I mean, to be fair, what did we do? We did, on our best trade, about 87 pips. At this point, we have already reached 168, right? So really, at this point, we would have doubled the position. And all we did here, to be fair, you could have potentially re-entered. So there is an argument for saying, well, just repeat the process. Identify that, this zone held. Any retest could be a potential buy, but we are working a little bit with hindsight in our favor. So would you have taken that trade? Maybe, maybe not. You've got to have your rules strictly defined. But for me, again, this one was a pretty clear trade. You had several instances where price told you, hey, we're looking bullish in this zone. Risk small and look for continuation. We did test the resilience of our stop loss here. That's something to note as well. We didn't have it wasn't like we entered the trade and instantly flew in our direction. This price retested the lows and specifically retested this structure low here. With our stop loss in place, we were able to stay in this trade and rally and make a really nice risk to reward trade. The thing is, no, they're not all going to look like this. You're going to have times where, maybe your stop loss was just a bit too tight and you stopped out of this position and ultimately it was a losing trade for you before you missed the boat. It's going to happen. There's no guarantee that every trade ever is going to work, no matter how good your strategy is. You have to understand that in terms of trading, we're not working in guarantees, we're working in probabilities. So I hope this video was helpful to you. If it was, hit the thumbs up button, but don't go anywhere. We got more videos coming for you. Popping up on the screen now should help you out. Check it out in the next price action course tutorial. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.